Hello, welcome to Anti-Ruggers United. Today we have an AMA with Lumin. So let's get started by having the Lumin devs introduce yourselves, tell us your background in the real world in crypto, how you guys got together as a team, and basically how you got to this place you are today. And after that, we'll go talk about the project.
Yeah, cool. Thanks for hosting us here. Yeah, so just to give a little bit of background, as a group, we sort of met each other in inverted commas on another project that was sort of similar in scope to what we has been built here, but the way it ended, we were really sort of disappointed in the way that it finalized, and so we sort of got together and chatted and said, well, let's create something that we think it should have been. So that was kind of like the start point as far as Lumin was concerned. Just a group of us, and so over 11 months it's come to fruition. It's a project that's been built from the ground up, so completely new code, so it's not a fork of anything, and the team has been working away over that period of time to get to this point. A little bit more as far as myself, I've kind of been in crypto since late 2011. I thought I was late then, which is kind of bizarre, but yeah, I've sort of seen all the ups and downs over that time, and profited and lost along the way. So but it's been, it's a pretty interesting space, as we all probably know here. So and I believe it's definitely the future of finance and so many other things. So I'm pleased to be here, where we are still very early, I think.
Michael, thank you. I couldn't find any team info. It seems to me like the website Lumin Finance, Lumin.finance. That one, the only thing I see on there is looks like almost like an iPad screenshot. There's like no other info on there. I don't know if it's loading correctly for me or not.
No, the core team are actually are anon, for good reason, and I'm here more as a promoter of the. I'm sort of not core team, but I'm outside of that, and here to sort of to promote Lumin and what it's about. But obviously it's an area that you need to be just protect yourself, really. So that's why the team is anon.
Okay, so they're anon, but has there been any KYC?
Yes, there has. Yes. And the team were KYC'd for the launch pad that we just had with Genpad.
Okay, and the most important thing is you said the core team's anon to the public, but to each other, are they known?
Yes. Yeah.
Okay, and especially the person who's going to be holding the contract, the keys, and all that. Those are all known, right? In real life, basically.
Yes. Yeah, and it's multi-sig and what have you. Yeah.
Okay. All right, perfect. That's good. And how long have you guys been working on this project for?
It's 11 months now. I think we started February. I think it was February time, the initial concept, and it's been a build all the way from there. So as I say, it's from the ground up. It's not a fork of another project. We wanted it to be exactly how we wanted it to be. So
Perfect. Thank you. By the way, congratulations on the pre-sale. We were kind of hoping that we would have, that's why we did the AMA today.
Yeah.
So we still have some time to do the AMA before the pre-sale filled, but it's fine. I'm sure people already seen it, so they bought it or didn't buy it, and I think for launch it's going to be a good time too. A lot of products nowadays, it's almost better just to buy it after the dip, on launch.
Yeah, yeah. I mean, we've had 3 pre-sales to this point. Each been slightly more, but not massively. So the first was at 30 cents. Then we had a pre-sale at 33 cents. The launch pad was 35 cents, and we'll be launching at 40 cents. So we've done it that way. So there wasn't like huge changes for either someone who's coming in at launch or someone who's bought in at any of the rounds. So we felt that was sort of the fairest way of doing things. And I think obviously, yeah, we did we did sell out before the end, and we thought there'd still be some to sell here for this AMA. But as I say, the difference between launch and the launch pad is not huge. Most of the people that have bought have kind of known us, in discussions in groups and everything before this. So they're long-term holders and see the vision for what Lumin is about. So it's they're people that aren't there for just making a quick buck. This is a project that has depth and longevity. So
Yeah, I like it that I gotta talk to Delta. I like it that you guys did not give some huge discounts, to the earlier raises, because if that happens, if let's say seed round gets like 3 or 4 times the tokens,
yes,
then that's usually not a very good thing, but not a very good sign. So
absolutely. I mean, on a similar note, I mean, we don't have VCs or anything like that, and I always, when I see projects with VC funding, that there's a cliff coming at some point where VCs aren't often. I'm a bit of a broad brush here, but often VCs are not there for they're there to get it going, and then they move on to the next project that they want a VC, and they make their money that way. Rather than being there for the long term of the project. So you always have that kind of worry that a cliff comes. Well, we haven't got that because we don't have that kind of initial backing. We didn't want it to be that. We wanted it to be very much a grassroots from the ground up. And the people who've initially invested, they're not that far cheaper than when you go to launch. So this is not a project that I think those people are looking to make a percentage gain and move on. They're looking for changing things for the good. So they're here for the long term.
yeah. So and the tax is going to be 5.5, right?
There's no taxes as far as I know. Are you talking about buying at the launch?
Yeah.
Correct me if I'm wrong, Edison. I don't think there are any taxes in buying and selling.
No, we have no taxes. Correct. I mean, we have platform fees, but no taxes off the token or anything.
It's the same. The contract itself is going to be tax free.
Yeah, the contract is already up. We also have an article written because we want to be quite transparent in how we handle the token. The contract is the most basic contract you can think of. There's no mint possibility for us. There's no weird backdoor or anything. We're very transparent in the amount of tokens that we are about to burn today because we want to keep the percentages equal to what we've initially communicated and everything. So you can just check the contract. You can check our Medium. We have a couple of posts, and there's one about the Lumin token. We're actively updating it with all of the vesting wallets, all of the calculations. So you can just take a look at it, take a look at the source code. It's already there, and see for yourself that
that's good.
tax or anything there. Yeah.
So there's going to be a lot of volume, most likely. And you guys are starting the launch at a slightly higher price, so everyone is going to be up. Up from pre-sale from the earlier sales. So there should be some good amount of back and forth action at launch. And I do want to, I want
to finish. Sorry.
All that, but I feel that let's go talk about the project itself first before we get into the details. So what is Lumin all about?
Well, Simply put, it's a decentralized peer-to-peer fixed rate lending platform, but it incentivizes the sort of stakeholders within the protocol. So the lender obviously is rewarded by getting fixed rates on their lending. The borrower is incentivized to borrow by taking some of the fees, and the staker of the Lumin token is also rewarded for staking their Lumin. So that's the simplest answer, but obviously we'll go into sort of more detail on what it's about.
So it's a lending platform. Is there going to be different? You could lend different tokens, coins, different blockchains.
Yeah, we're launching initially on Arbitrum, but we are intending to be multi-chain. So, and initially, the actual tokens that you can trade, loan out and borrow are ARB, GMX, Pendle, the usual sort of stable coins, UST, USDC, and then there's RETH and WST ETH as well, which is like Lido. So yeah, we've kept it to a fairly small range at the moment, because then you have the liquidity is has time to sort of grow and everything rather than sort of spreading it out. But there will be more sort of exotic assets as well that you'll be able to use as we go forward. So we'll add them as we go.
Oh, perfect, thank you. And for the platform itself, all the lending is going to be done via contract on a blockchain, or is there going to be some external, algorithms or databases, or is it all going to be done on the blockchain?
So the lending itself is all totally on the blockchain. We had initially released a testnet where we also retrieved all of the data out of the contracts over just nodes, right? Like Web3 access there. That was really slow. So we decided to go with a subgraph there to use at least that as a backend for data, for visualizing everything in a user interface. But the actual lending, the calculations, the liquidations, and everything is totally on-chain.
Thank you. And I'm assuming there's an audit for all that already, or in progress?
Yeah, we went. Yeah, we also wrote 2 articles about this. One about the whole process of the audit, and also one where we go through all of the findings and comment the findings, because there are findings that you fix. There's also findings that you say, well, okay, we take it for to notice, but we cannot fix it. For example, one of the findings was that we have Solidity 0820, which isn't the default version supported on Arbitrum, just because Arbitrum is still on London EVM. But in our opinion, this is not really finding. We discuss how we go around it, that we just compiled it with different compiler switches to compile it with the newest compiler, but immediately for the latest Arbitrum version there is. So you can read all of the things about the audit and our comments on the audit on our Medium as well. But yeah, we went for the solo audit with Koen Pashov, is a well-known solo auditor. And when we are feature complete, we intend to go with a more bigger, well-known company to once more go over everything else that we will add, like, for example, the multi-chain stuff, the governance, and everything else.
Okay. Good. So, yeah, one thing I forgot to ask, your team, I know you guys are anonymous, but mainly roughly what's the size of the team, and like what countries are you guys from?
The actual core team. Oh, go on. No, that's right, Edson. You go.
Yeah, okay, doesn't matter. But the core team, I would say, is 6 people. That includes developers, but also advisors and marketing and everything. 6 persons, of which 1 backend and smart contract developer, that's me. I'm actually not anonymous because we also wrote something about this, but there's a reason why I'm not anonymous. Set up a company to be able to deliver the software and to also have it audited, because obviously the auditor also needs to send this invoice somewhere, and there needs to be a legal entity for this. So the software development part is totally doxed, so to say. That's not anonymous. It's just the Lumin team and the Lumin hosting and Lumin community management that is anonymous. So, okay, one backend developer, smart contract developer, one front-end developer, and then 4 other persons for a lot of different tasks that need to be done. Countries, actually all around the EU. Not all in the same country, but we're all based in the EU.
All right. So, okay, you guys are all from Europe. Okay, that's good. That's good.
Yeah.
And registered company, legal entity, right? The company itself. Is it
correct? The company that develops the software is registered. The Lumin, so the team managing all the tokens and the sale and everything is unregistered and is anonymous.
Okay, so just development, right? Okay, good. All right, perfect. All right, so let's talk about a little bit of the specifics about the lending, the loans, how all that will work. What's the incentives, the collateral. You guys want to go do a brief rundown of all that, like how the whole system works?
Yeah, I can explain it from 2 different points of view. So me as a lender on the platform and me as a borrower on the platform. So first, the lender deposits assets into our contracts, right? So the lender has USDC that he wants to lend out. So deposits USDC into his own deposit or her own deposit on Lumin Finance. So it's there in our contracts. Then with this deposit, you can create a loan configuration. You can say, well, I allow people to take a loan of my USDC. I want the collateral to be at least 120%. I want it to be loans lasting 60 days, for example, for 3% interest or something. Then you also say which collateral assets do you want to accept. Maybe you only accept ETH as a collateral, or you accept a whole list of very exotic collaterals. That is up to you as a lender. Which collateral assets you want to accept. I think we're quite flexible there because there's a lot of protocols that just accept only one asset. So you could, for example, mix and match. You can say, well, you do 50% in a stable coin to reduce your risk, and you do the other 50% in a more volatile asset, for example. Then also per asset, you can say which price feeds you accept. So do you accept Chainlink price feed or DIA price feed or other things? We have kind of like a plugin system that we can easily extend it for different types of assets, not just ERC20 later on, and where we can just read the price over different price feeds. But you as a lender say, well, I feel comfortable with these assets for interest payments and for principal payments. So collateral assets as well. And I feel comfortable with these price feeds. So then you have a list of different configurations. You can offer your same dollar in 10 different ways. And you can offer long loans with low interest rates, short loans with higher interest rates, or vice versa, whatever you prefer. And it's just waiting there. Your assets are waiting in a menu that is showing in all of the different marketplaces that we have. Waiting for a borrower to step in and say, okay, I would like to borrow X amount from this platform. So you kind of search in all of the loan configurations that you can find for the market, and you see, okay, who offers me the amount that I want to borrow. So this is, I think, quite nice because it avoids the need for people to make agreements. Can you please put up an offer to offer exactly this amount that I want to borrow? So it is still peer-to-peer. But at the same time, it's very flexible that you can say, I lend out between a minimum amount and a maximum amount. So you don't have to align on so many things peer-to-peer. So the borrower says, okay, I want to take whatever loan configuration. puts the collateral there, gets the money that they want to borrow, and the platform fees are paid immediately when taking the loan. So the platform fees are deducted from the amount that you borrow from the platform. And that is more or less it. Then you have your loan. You need to pay back your loan, of course. There's different ways of paying back. Either you pay back your interest and your principal by the end of your whole loan, or you pay it back every 30 days. That depends on what the lender decided what they want to do for this loan configuration and what you agree on when you take this loan. So every 30 days you pay back your share of whatever you should pay back every term or at the end. And by the end, when you've paid back everything, you release your collateral, and the lender is paid back, and he has his money back, so to say, and can lend it out to other people. So there's a couple of other things there. For example, when you have a loan, like I'm a lender, I lend out something to a borrower, and for my loan, I receive 10 loan shares. And a loan share is like a fractional ownership of this loan. So I can say, well, I have a loan that is running for a full year, but I would like to have some liquidity at this moment. So I want to sell part of my loan. So you can, on the secondary market, you can sell 10%, 20, 30% of your loan to someone, and they are entitled to get 10, 20, 30% of all the future payments that will happen for that loan. So it's kind of flexible, that you're not really stuck with your loan. If you need liquidity, you just trade your loans with other people, so to say. It's just the borrower that cannot change it, and the borrower is just obliged to pay back, because otherwise they will lose their collateral. But for collateral, we allow complete changes of collateral. If before you had only ETH and it proved to be a bit too volatile, you can completely take out your ETH and put back USDC or whatever asset that the lender said they want to accept as possible collateral assets.
All right, thank you. So initially when I looked at this project briefly, my one big question that I had, like, that immediately popped up for me is what is the incentive for borrowers? Like, can you give us some examples of when someone would get a loan? Like, what would be the use them to get the loan? Like, let's say I have 10,000 worth of ETH, and I want to use your platform to borrow. What would be my reasoning to use it to borrow? How much would I borrow, and for what purpose?
Yeah, this question is asked often, and it makes sense. I mean, normally if you take a loan from a bank, the bank knows where to find you and where to get their money back in case you don't pay, right? It's harder in DeFi. You don't know who borrows from you, so you need to have something sitting somewhere in return, so you don't lose whatever you lend out to someone. So yeah, you put a collateral that is higher than the amount that you borrow. So why would you do this? There's a lot of different reasons you may want to do it. First, you maybe don't want to sell your assets. I mean, there's countries where if you would sell your asset within a certain amount of time, you have to pay taxes on it, which wouldn't happen in this case because you actually still own it. You still own this asset. For example, you have ETH, as you just said, you can stake it, and while staking it actually gives you something extra, and you can use this staked ETH as collateral because it also has value. So while you're staking your ETH and it's giving you something, you can borrow some other asset and put that to use. You can maybe buy a cryptocurrency of which you think, well, the value will go down. So you buy it now, you sell it, and you pay it back in the end with the much cheaper value that it will be at the end. There's really a lot of different reasons why people would do it. I mean, we intend to take a look at what people do with all of these things and write down some nice use cases that can be done in the whole DeFi ecosystem.
I see. So you could basically borrow in a way of short selling.
Yes.
For example, you can do the short selling. Myself, I really find the other thing very interesting. If you have USDC or ETH and you're staking it somewhere, we are also providing a Yearn vault, for example, where your USDC can make you more money. While it's making you more money, you can use it at the same time just as collateral on the platform, and borrow something else and use it for some other purpose. So yeah, there's really a lot of different use cases, and we're very curious to see what people will come up with to put their assets to use in different other DeFi platforms, because we're just part of the DeFi ecosystem, and we want to be like a foundational layer where people deposit their assets and use it for whatever creative purposes in the whole DeFi ecosystem.
Yeah, but so the big question is, I know that the thing you could short sell and do that, but like, if the main reason why people borrow from a bank or even centralized exchanges or leverage is because they want to use more funds than they have available, right? So if they have those funds available now, in fact, you need even more collateral than the loan. Why wouldn't they just use that loan? Like, for example, if they wanted to sell something, they could have just, they could have, or they have Ethereum. You could either, buy XYZ tokens or coins with that ETH, and I'm sure staking, whatever they do with, you stake it and use that as collateral. I'm pretty sure the staking percentages is not going to be as high as the loan PR in most cases. That's probably not going to be a good incentive part. So that's the thing. Like, I do see the benefit of maybe borrowing a coin that you can't short sell on a centralized exchange, like maybe some shit coins that you think the price is going to go down, so you would borrow it, right, and then you would sell it. But at the same time, in like the real world especially, right, it's not a very good idea to short sell very volatile stocks, coins. That's why like a lot of stock trading platforms, they don't even allow you to short sell some of the like penny stocks or anything like that. Even though Wall Street Bet meme stocks are usually not able to short sell, is because there's an unlimited amount of risk when you short sell. You could short sell and it goes up 10x, and now you owe 10 times what you borrowed, right? But if you long, the risk is that you're gonna lose your initial, so you can't lose more than 100%. But when short sell, you could lose, unlimited amount, and that's why they don't allow you to short sell all these stocks. So I think this would apply also to shitcoins. Imagine you short sell a shitcoin that's like 100 million market cap. Now it goes to $1 billion market cap. You're screwed. You're going to be, liquidated, right? You're going to lose your collateral. So I do see some.
I'm sorry to interrupt, but I think that's just the way it is with short selling. I mean, instead of short selling, you could also say, well, you have ETH, you stake it, your ETH is making you something. You borrow USDC, you put your USDC in Stargate Finance, and you get Stargate tokens for it, and you lose absolutely nothing. So you have your ETH making some money for you, and at the same time, while you have your loan, you have your USDC that you borrowed making money for you. I mean, the short selling is just one of the things some people may do. I totally understand that not everybody is willing to do this, but it's certainly not the only scenario in which you would like to borrow something.
I'm glad actually that because I was like, we were talking about this, like, wow, we wish we could short sell all these shit coins, man, because a lot of them are just pump and dumps, right? They just have one pump and then they dump. Imagine you could short sell every single shit coin that launches. That'll be pretty awesome. But like the thing is, these coins have to be offered by the lender, right? So do you have a way for you to be able to offer, like how the borrower actually requests what they want to borrow, and then you'll find a lender for them instead of the other way around? And when you have lenders offering, what they're lending, can you do it the other way? So you could have like basically like almost like a marketplace, right? You could have lenders offering whatever coins they're offering to lend, and also borrowers requesting what they want to be borrowing. Is that possible?
Mm-hmm. No, we've discussed it, and we think that by the utilization of the platform, it will become very clear where is the sweet spot of what people would like to get, right? if you offer 10 different loan configurations and you see, well, people intend to have really short loans or really long loans, you can focus on these things because you see what type of loan configurations are being picked up and which are not picked up. Because if you would reverse it and if you would say, well, let's just offer my borrow wish, for example, then you would have so much data that the lenders have to go through that is really hard to compare what people would like to have. So we chose to do it only from one point of view and to let the actual users of the market show what is the desired type of loan that people would like to have. But of course, we also supply Discord channels later on where people can discuss. So you can discuss what they would like to have as loans and stuff. So there can still be some peer-to-peer discussions going on. But we just think that this way that we did it, we minimized the need for people to actually actively discuss or very detailed say what they would like to have exactly.
Yeah. Okay. So essentially, this platform is allowing people, to borrow different coins, tokens without having to sell what they currently have. So that's like basically probably the most basic, explanation, right? Like, because a lot of times, like we discussed, you could just easily just sell what you have and buy whatever you want to borrow. But if you don't want to sell, like, let's say the $10,000 worth of ETH, because you think that's going to go up too, you don't want to sell it. So you could stake that, like you said, and borrow something else that you want to play with, right? You want to maybe buy some BNB because you want to do some pre-sales or something. You could just go borrow some BNB while still keeping your, 10,000 worth of ETH. And let's say ETH goes up, BNB goes up, it doesn't matter, but you also make some X's or something on your, on the coins on the BSC chain. You could sell those, you could repay the loan, right? So I see the uses of it, definitely.
Yeah, that's exactly it. Really, it's very much about if you have conviction on what you're holding, rather than selling it, which you don't want to do, you put it to work. And where sort of DeFi lending comes in is that in the sort of normal world, if you want to go and get a loan from a bank, they'll ask for your inside leg measurement. You'll have to have all the details on the table. And normally they'll only allow you the loan when you don't actually need the loan. Whereas in DeFi, your collateral is what you're good for. So, and that's why they're over collateralized loans. So if you have it, you can put it in and you can make it work for you. You don't need anything else. You don't need any sort of giving out your inside leg measurement to do that. That is, you're good to go because of your collateral. So, that's the beauty of DeFi and crypto. It gives you the opportunity to do things with what you hold without selling it, basically.
Yeah, thank you. This is actually, I'm actually getting some ideas right now. Like, how like right now most of the projects in this space they are money grabs, or they're CEOs that have no business running a company or even running any tokens. That's why it's all scams, a whole bunch of failed projects, even the ones that are, legit. They have use cases. Usually they never realize their full use case. They, give up, run away, a week, a month after launch. So, and what we like to do here and the projects we like to invest in, especially with our upcoming plans, is we want to see devs, put their money where their mouth is, because in the real world, you're starting a business takes risk. You want to open up a shop, you want to open up a bakery, a warehouse, whatever. You as the business owner are putting up your capital, right? In this space, it's kind of the opposite. Almost nobody has risk. The only risk is the investors. A lot of times, devs do put money in development, a lot of projects, but for the most part, they're just risking investors' money and when they have no business running a company. And that's kind of why the quality of projects and companies in this space is just pretty much garbage for the most part. So,
yeah, sorry, I was just going to say to add to what you're saying there. Really, yeah, the majority of projects out there, crypto projects, are garbage. If there's 12,000 cryptocurrencies, you could probably 95% of those could just be thrown to the curb for being useless. But where we come in here is we've invested our time. The team has invested their time in building something from scratch here without VCs, and taking minimal costs out. So that's where this is a project that needs to be looked at and thought about by people, because it's a team that's put their heart and soul into it, passion and commitment to bring something of worth to DeFi, rather than just a project just to just to make money or whatever.
Yeah. So my idea was coming to the point where is like I said, we want to see the devs actually having some risk, because that actually means they can't just give up so easily, and that's why a lot of these projects, why the devs, just put a half-assed effort in and just give up, run away, then come back a month later and start something new. And but if they have real money, if they have their own collateral in a way, how you would run a real business, then they're gonna put in a lot more effort, right? Like if you have your own money on the line, then you would be doing what needs to be done to be successful. At least try. So my idea is this: you could do something like use your platform as a collateral for the devs. Like, hey, if the project fails, you're gonna lose your 20K.
Yeah, I mean, we obviously our time is vastly more valuable than anything, and we've put that commitment in over 11 months to bring something to the table that people can participate in or not. But it's an opportunity for normal investors to get something that they know is consistent and is going to give them a return that they expect. So the reason I mentioned that is that it's a fixed rate lending platform, and the importance to remember there is this is not like a pooled protocol like, say, Aave, for instance, where it suggests an APY for putting your money into that pool, but as others drop into that pool as well, the APY that you thought you were going to get at the start actually trends towards zero, and by the end of the year, you're getting significantly less than you thought you would. Here, if you have set your terms and you're going to get 5% for 90 days, that is what you'll get at the end of 90 days. It's very black and white on that front. So that gives you certainty, and what's happening, and you can control what you're doing with your assets in a much more set way there that anyone would like to have, rather than not really knowing what you're going to get at the end of the day.
Yeah, and there will be lending pools, right? So for example, you could just have one lender lending a certain obscure token, but if like 30, 40 lenders want to lend Ethereum, for example, and they all could agree on the price and whatever, you can have multiple lenders all in one pool. Is that correct?
No, it's not pooled lending. So that you can have multiple lenders, but they're individual lenders. So you will be the borrower and the lender are creating an agreement together, and it's fixed. Those terms are fixed when you go through the platform. You decide on, the lender decides on his parameters, the borrower comes and looks and says, I like those parameters, and I want to borrow that money. So and that's why you don't get a diluted thing. They're not pooled funds. So if it's 5% is what has been agreed, that is what the lender will get back. That's what the borrower will pay, and it's straight set like that. So you don't have a situation where someone else is dropping in and reducing that in any way.
No, but I'm saying is you don't have to reduce it. Well, my point is, let's say I want to borrow a large amount. Let's say and instead of going with 6 different separate loans, different contracts, maybe it'd be a good idea to have some kind of pooled lending where you still get the whole percentage APY and everything, but it's multiple lenders together because there's not enough funds for one lender. Let's say I want to borrow 100K, right? And one guy's offering 30K loan, another guy's offering a 40K loan, 20K loan. I would have to go with 3 separate lenders, but if they could all agree on an APY, and terms, then you could have a bigger loan, you know what I mean? That way I wouldn't have to go and, borrow from like 3-4 guys. I could just borrow from one pool. It'd be easier for bigger, for whales and bigger, amounts to be borrowed. Just an idea, that's why I asked, because I feel like that could be useful too. Like if someone wants to actually borrow, more money, because I don't know what kind of lending you guys are going to have. It's going to be like, $300, $1,000, but most of the time, when people want to borrow, they want to borrow a substantial amount. So like I could see 10K, plus, and there's a whole bunch of offers for like $500. It won't be very useful. You know what I mean?
Sure. I mean, Edison, if you want to chime in on that, as far as I'm aware, it's you would, if you wanted to borrow 100,000 and there wasn't one lender lending 100,000 at that point, you would have to do it with multiple lenders. But Edison, is that correct?
Yeah, that's correct at this moment, and I think we won't change it, because if you would have like this semi-pooled lending, then you have peer-to-peer pooled lending. So you have like tiny private pools, so to say, where you also have to make agreements, right? Like who gets what share, and you maybe can make it like a fair share and everything. But I think that the complication of it in the user interface, in the usage for everybody on the platform and everything, don't justify the use case, because I think you can easily just take several loans. They will all have similar requirements and stuff. It's very easy to pay back and to manage these loans. Maybe we could have something where you can bulk pay back loans and everything, or bulk manage loans. That would make more sense, I think, than teaming up and creating tiny private pools, so to say.
Yeah. I guess, it depends on, the amounts. Okay, that's fine. That's good. Yeah, because I know like KuCoin, for example, when you borrow funds for spot trading and all that, or leverage trading, you could borrow from each individual person, but there are people, at the top that have like millions of dollars worth, of funds that they're lending. So you could just borrow from one guy, right? Instead of borrowing like a whole bunch.
Yeah.
So I mean, that's cool. So okay, let's talk about the one important thing is we talked already about the taxes, going to be zero tax, the tokenomics, distribution, and investing schedules, and also about the raises. Can you let's go start off with the previous fundraisers. How much was raised and where it was from? Like, where'd you guys raise it? Was it like private sales, GG, like 100K was, as an example, and how long ago this happened?
Sure. We've had 3 funding rounds now, including the launchpad that's just gone. The first round, we raised 124,000, or just shy of $125,000. That was at a 30-cent price for the token. The second round, we raised another 100,000 at a 33-cent price, and then the launchpads just sold out. I've forgotten what the dollar value is. It was 69.5 ETH. And that was at 35-cent price. So there's just been a slight increment, obviously, for the earliest adopters, got slightly better rates, but nothing too silly as far as moving it up. And then the launch price will be around 40 cents. There'll be a liquidity pool on Balancer where the token will be traded from tomorrow.
Oh, that's one of the things I wanted to ask. I think I was talking to Delta about how he said something about 400,000 in the liquidity pool. How is that possible?
So the liquidity pool with Balancer, it's an 80-20 split. So 20% is dollar value and 80% is the Lumin token. So and that equates to a $400,000 liquidity at the start. So 320,000 in Lumin tokens and 80,000 in USDC.
Can you explain how the balancer works? Because normally, right, when you put liquidity in, the initial ratio is what sets the price. And if you want to launch with, let's say 200K liquidity, you would have to put in 100K worth of tokens, and you'd have to put in 100K worth of ETH. So this is different, like you said, it's 400K liquidity, but you only have 100K or so of tokens. Actually, you said 20%, right? So even less than 100K worth of ETH and like 300 plus worth of tokens. So how does that work? How do the tokens have that value if there's not enough ETH to back it up?
I'll let Edison explain balancer a bit more than myself, if I can.
Yeah, there's actually a lot of material on balance. So it's not as simple as like the 50-50 pools that everybody knows, right? The downside of these 50-50 pools is that you have a high impermanent loss, right? So if you would provide liquidity, for example, early on and the price goes up, then you would actually lose a lot of value, which is a lot less in these 80-20 pools. To be honest, I honestly think it would make more sense to just distribute the reading material to go through it, to look really into detail how it works exactly, because Balancer really details everything out very well. There's a lot of benefits to these 80-20 pools over 50-50 pools, also for users and for traders and everything. I don't think it makes a lot of sense to go into the Balancer details for 80-20 pools in general here. But we will happily share like the reading materials afterwards. So you can dive into
in the details. Maybe like a quick explanation. How normmally a 50-50 pool, you launch with low liquidity, like low amount. Let's say maybe 10 ETH for 10 tokens. I'm just giving an example. So one token is worth 1 ETH, right? If you have a whole bunch of buys coming in, it's going to raise the price a lot quickly, but also it'll drop the price because liquidity is not that high, for example. And then if you do 100 ETH, which is the 100 tokens, liquidity is a lot higher. The price will be a lot more stable, unless there's a way more buys coming in, like in proportion. But in an 80-20, let's say if there's a lot more tokens, but even then, like to get the correct price, you still need to pair only, let's say it's an 80-20 pool, right? So you have 20% ETH. To get the correct price, you still need to have initial liquidity at 50-50, right? Just set the actual, whatever, when you're adding LP initially, just set the price. So that then you have all those tokens in reserve. So can you maybe just give us like a rough idea of what happens?
Yeah, I mean, so it is 80-20. So for every one USD, whether that's USDC or USDT that we put in, we put $4 worth of Lumen into the pool. So the balance is already off in the pool itself. It is not like an equal split with the simple, X times Y equals K calculation. It's a more complex calculation that just balances these numbers in the pool. So if your question was to ask like how can it be that you have that much liquidity in the pool if you only provide 20% of the value in stable coins, if that was the question, then it is just because we put 4 times as much of the native token of Lumen into the pool to match that 20%. And then the balancer pools, they handle automatically the calculations for the value and everything. And again, benefits for impermanent loss and stuff, they are just for everybody much better than the 50-50 pools.
Okay. Yeah, I like to actually use, I don't know if you guys are familiar, for like PooCoin, which is, the BSC side, versus DEX tools, which is like all the chains. DEX tools, at least from what I remember last time, DEX tools, the liquidity is actually double what you see in PooCoin, because they use the value of the tokens and the value of the stables or the Ethereum, for example. called PooCoin is just the value of the BNB. Because at least that's the way I think. Tokens are worthless on their own. You need the liquidity from the actual stables or Ethereum, BNB. So you could have 10x tokens, but if there's no Ethereum in there to back it up, that's why it goes to zero. Projects go to zero. It's because all the Ethereum was taken out. There's tons of tokens in there, and the pool everyone's selling, they don't have any value. The balancer thing is actually very interesting. Has there been any projects? Maybe you guys could share chat or whatever, like maybe some charts, examples of projects that use this kind of this balancer. Because I didn't think it's my first time seeing a project do it this way, so it'd be kind of interesting to see how it performed.
Yeah, for sure. We can share some interesting materials there. Yeah.
What was the reasoning you guys chose in method?
Well, we have maybe some news coming up that we cannot yet share, and also the pool has benefits. The type of pool, the 80-20, over 50-50 pools, as I said before, and these benefits for us are more important than sticking with the traditional pools. I mean, there's just improvements all over the space in DeFi, and those benefits are important for us. Like if we want people to help us put liquidity into the pool, for example, then reducing the impermanent loss, for example, is just important for such a pool. So we chose for this. We maybe then, as said, have some other news coming up soon. But out of those are IL reasons and the good news, we chose for that. That's actually the main reason. Maybe you also intend to ask, like, okay, we've had 3 fundraising rounds. You have quite a bit of funds. Why don't you put all of those funds into a liquidity pool with all of your tokens that you have? Maybe that's your intention with the question. I can explain a bit of it. We are actually very transparent in our costs. We have listed how much we've paid for our smart contract auditor. Me, myself, I've quit my job. It was actually a good job. I've been working on Lumin full time. I took exactly $9,000 out of the cash, so to say, of the project, which is it's under minimum wage for a developer. It's just because I believe in the project and I believe that it will be doing well. So we're very transparent that we're not wasting money anywhere. We are listing all of our expenses, and we need to keep some money in our treasury because for example, if the price goes down, we also want to have the ability to stabilize the pool as well. I mean, putting everything in the pool at this moment, launch and let everybody sell their tokens, it may not end well, and we want to have a couple of buffers that we can come back well from this thing instead of just a downward spiral and just the end of the project. But you're more than welcome to read into our expense report and to follow along what we will keep on expanding on, because there's hardly anything taken out of it that is not directly meant for the project.
All right, and I was
going to say also just to add, if you check somewhere like Aave, they use balancer pools too. It's quite well used in DeFi now. So if people want to have a quick look at Aave and see what they do as well, and they're by far and away the biggest lender in the whole of the space. So it's very much about stabilizing the pool in the beginning as we build, and balancer is the best way of doing that.
Okay. Yeah, I'm just curious how it's gonna work for let's say for selling, if you have 80% tokens, 20% ETH, there's still only 20% ETH. So if someone's selling ETH, they're gonna have to take all that ETH out of the pool, right? So then the ratio is gonna get even more, higher to where 90% tokens, 10% ETH, something like that. If people are selling. So yeah, I'd just be curious to see how that's gonna play out. That's actually pretty cool.
Yeah, definitely would recommend checking out the docs on Balancer. It is well used, and it's been well thought through by the balance of team. So yeah, I think you'll be surprised at how much it's an improvement on just a straight 50-50 in many ways.
Yeah, I mean, there's definitely things that could be done better with the 50-50. So yeah, it'll be nice to see like what kind of problems it solves. So I'm definitely going to be reading up about it. All right, let's go. I have a couple more questions. I did want to go back a little bit to my first question, and because someone did ask that also in chat, but we didn't really get the answer for part of it. About the team, like their real life. For example, you said you quit your job. Like, what kind of experience or what backgrounds are some of the first coming from? For example, like IT, engineering, whatever you guys do in the real world. Just kind of see who's behind the project in a way. It does help us kind of get.
Yeah, sure. Yeah. So for me, I have, I think, about 20 years of professional experience as a developer. I actually develop low-level software usually. Work in Germany, or have worked in Germany as a developer for embedded software, which sounds a bit weird because why embedded software combined with smart contracts, right? But whether you optimize for gas or you optimize for CPU cycles or for RAM usage and stuff is very similar actually. So that's how I started as a developer, and later became a team lead and project lead for rather large companies in Germany and stuff. So yeah, I gave up that job because I actually have a lot of joy in working on Lumin, and also believe in the future of Lumin. So I decided to take the risk and work on that full time. The other developer is also a professional UI developer who has temporarily paused his job to focus more on Lumin for a while. But his main job is also in the EU, working for clients that need web user interfaces and everything. That is, as far as I can tell, at least about the developers for the project.
Okay, that's good. That's good. That's good enough. So you guys basically kind of, at least you're going all in. You quit your job.
Yeah.
Talked earlier about CEOs, devs running projects with zero risk. So I like the fact that you did this. That's actually a very big a very big bonus or big green flag. Say that you guys are definitely.
It's just not possible otherwise, I think. I think in the beginning we also realized that having a full-time job that is actually quite demanding, and on top working on something where you really need to focus and align a lot with the team. I mean, that is something that we've really learned to do over the past 11 months then, because we are all spread over the EU. It just takes a lot of time, and only working on those things in the evenings and nights is just not possible over such a long amount of time. Yeah. So in order to bring this to a good result, we had to do this, I think.
Yeah, taking it seriously. That's good. That's what we like to see. All right, one last thing I want to talk about before we hand it off to the community. The community has any questions? So is the token distribution. So I see on the docs, there's 50% fundraising, 50% marketing, 50% team, 20% farm rewards, 22% DAO decisions, 12% liquidity. So can you explain about what's vested? Because 15% for fundraising, and you guys raised something above 300K, right? I would say that is.
No, I think over 2.
Is it 200K?
No, I think over 300K in total. I think. Yeah, 200K in the first 2 rounds plus 150K now. Yeah, so like 350K more or less, I think.
Yeah, 350K, and basically based on the chart, only 15% of the tokens are going to the investors, right? And then 12% is going to liquidity.
Well, yeah, yes and no. I think the biggest part, 22.5% of all the tokens that we have, are vested over 4,000 days, so that's like 12 years, and those are emitted daily. And with that emission that we have, these rewards for the people who borrow on our platform, we reimburse the people that are paying interest with these tokens. So if you pay that day maybe $1 interest, you receive tokens worth $1 at that day to make up for the interest that you have paid to someone. And of course, we dilute the token circulation with it. But the biggest chunk of everything we have is going directly to the borrowers. The second biggest chunk that we have is our governance, our DAO, and that actually belongs to the people who bought at this moment, because they are the ones who can vote what to do with these tokens. So we have, I think, almost 50% of all the tokens, or 45% or something, does belong to the people using the platform and voting on it and everything. Then you have the liquidity for 15%, so then you're already over 50%, almost 60%, for the basics that you just need to have the whole system running and everything. Plus the fund raising itself, so the tokens that are in distribution now, there's also 50%. Then the only thing that's remaining is the marketing wallet, which we need to pay marketing for. I mean, they do cost quite some money sometimes, these people. And and then 50% for the team. But what was important for us is that we said, well, we initially planned on having a circulation of 10 million maximum. But we realized during the pre-sale that we didn't sell everything. So instead of selling 1.5 million tokens, we have sold 1.1 or 1.13 million tokens. So we said, okay, we're going to burn everything above it to make sure that the team wallet of 15% is still 15% of the total supply, and not just because not as many people bought as we initially thought, that we suddenly have a larger wallet than the people who invested in the thing. So we made sure that we burned all of those tokens that otherwise would have ended up with the team. And we kept the percentages as initially communicated the same as in the beginning.
Are the team tokens vested?
Also, I was just going to mention, it's worth noting that the team wallet and marketing, they're all vested tokens over a 2-year period, whereas the fundraising, so everything that pre-salers have bought, is fully unlocked. So they're able to do what they want straight from token launch.
On GE, is all 100% of the team marketing wallets locked up?
Yeah, so their team wallets and marketing wallets are vested over a 2-year period.
So when does it start? On day one?
Yeah, so tomorrow we have, on the same Medium article that I mentioned, we have a list of all of the wallets that we've deployed. They're very simple wallets as well, with all of the calculations. So you can see exactly when does it start, when does it end. It's also listed in the Medium article. We are actually now doing the calculations, how much we need to burn and how much we need to send to all of the wallets. And then later today, we will actually send all of the wallets these tokens, and they are vested. And it's a very default or very simple thing where you can just claim your tokens. There's no way to take them out at all. So we cannot suddenly say, okay, let's just increase the vesting or something for the team. We can never get more. But neither can the DAO, neither can the borrower rewards. It's maximum what it is set at this moment.
Okay, that's good. Yeah, I see definitely the Medium article right now. Oh, different. Cool, man. Awesome. So you guys have good being transparent and all that. So I think I am done with my questions. Launch is tomorrow.
Token launch, yeah.
Is it going to be what time? UTC?
7 p.m.
7 p.m. UTC. Okay. Are you guys going to be doing some marketing from now until then? Because I know, like, a lot of times this is not a fair launch, so that's good. But it's good to have that 24-hour period, between pre-sale and launch, to get the hype going, to get more hype going, to get everyone that didn't know about it at pre-sale to know about it at launch, right?
Sure.
Yeah.
Marketing.
Yeah, we've actually went with the marketing company. This was also made public to the community. We've spent part of our treasury onto a marketing company on also AMAs, KOLs, and everything to spread the word for Lumin, which is happening now as well. But just because we kind of sold out before we planned to sell out, we still have a couple of people lined up that we will use over the next few days. So also when the token launch is there, but also when the platform launch will come, to keep on informing new communities about Lumin and hopefully attract more people. not even just for the token, but also to use the platform, to put the assets to use and to make more money for whatever they have sitting there idle and not making more for them. So yeah, I mean, we certainly have marketing still lined up over the course of the next weeks, and we have this marketing budget that we, of course, also intend to spend on more marketing.
Okay, perfect. Thank you. So that's all the questions I had. Now let's go to the community. If there are any questions, feel free to ask them now in chat or voice chat. I see some from Monkey Boy. Let's see. Like, there's one question he had. What was the project name that inspired this project, and what will you do differently that will hopefully ensure success?
It's a good question. Well, the project was called Campecchi. It came from Yield Finance, which I think that was peer-to-peer. Campecchi was pooled lending. The idea was nice, and everybody was really excited about this idea. But I think that the team didn't really give a lot of transparency in the project. There was also a couple of things going wrong on the Phantom smart chain that it was deployed on in the end, with the cross-chain issues and Phantom itself going down a lot in value right after launch and stuff. So a lot of unfortunate events happening at the same time. And now the whole contracts have been ossified. There's no changing possible anymore and stuff. So it kind of ended the whole project. So initially we actually had the idea of, well, we just want to fork whatever is there. But when talking about the things that we thought were wrong, and I personally have the opinion that the tokenomics were wrong there, where when the price went down, it was in a downward spiral, and there would be more and more tokens in existence that people would dump and stuff. So we decided to keep the platform usage different or separate from the token usage. So you don't have to have the tokens to use our platform, and you don't need to use the platform if you have a tokens. If you have a tokens, you just get revenue share. You have a vote in the platform, so hopefully the tokens you stake make you more money. You are paid in the actual assets that people pay their fees in. So by staking Lumin, you will receive ETH, USDC, USDT, and everything. But at the same time, if you just want a loan, there's absolutely no reason for you to have this token, because we want a lot of people to use the platform and to generate money for the token holders for us. So I think that's the biggest difference we have, and I do think that we have learned that giving transparency to the community is very important, and that is a very important thing that was missing in the other project.
All right, perfect. Thank you. I do remember, I can't think of the top of my head, a certain project that had some kind of lending. I don't know if it was similar, but I think it was along the lines. And there's also one that had insurance. But I'm like, I don't know how you're gonna make insurance work in this space, man. When like 95% of the time people are getting rugged, you can't have insurance for that.
Yeah, definitely.
Yeah. So, any more questions, guys? Pretty quiet right now. I feel like because this is like a different time that we're doing the AMA, everyone's like sleeping or what? What time is it for you guys right now?
It's just gone midday here.
Midday, okay. Yeah, we
6 a.m.
normally have our AMAs, 6 and 8 p.m. ETC. So it's the first time doing it at 11 p.m. And normally I wouldn't do it this time either because I'm from PST time zone, but right now I'm in Florida, so.
Well, thanks a lot for making the exception for us. It's also nice, I think, for your followers from different time zones to actually be involved in some AMAs now. But thanks a lot for your very early time to host us today.
Yeah, definitely. It's actually kind of interesting because I want to see how the turnout's going to be around this time because it's the first time doing it. And I know a lot of people how work during like our normal times because they're from Europe. Hey, like Enemy Crab is tuning in at 4 a.m. right now. That's dedication.
Full on DJ.
Yeah. I was hoping we still had some it'd be kind of cool to have, you know, the pre-sale open during the AMA. That'd be fun, because I know a lot of our guys don't invest until we have an AMA.
Sure.
And that's why we do them. Or if, you know, we have a call, or, you know, I have my, you know, add my 2 cents to something, you know, always, you know, putting, you know, my thoughts in there. So they kind of want to see what we think, you know, what some of our guys think. But I feel like the project, I definitely seen it raising pretty quickly, because I was in Disney today. I came back home and I'm like, dang, it's almost filled already.
Yeah, we were surprised ourselves. We thought usually with a launch pad you get that manic FOMO at the end of the time, so we were expecting it to be you know, at the end of today rather than last night, or last night was certainly for me. Yeah, as it got, you know, close to the 69.5 ETH, people were just, you know, didn't want to miss out. So it's just one of those things. It went even more successfully than we thought it was going to. So yeah, we certainly thought there would be some still available at this point. But
I think doing it the way you guys did with not a fair launch, because we hate fair launches, doing it like this is definitely better. And that's probably why, though, it filled faster, because I feel like the whole thing almost happened fair launches. A lot of people want to see kind of like at the end, like how much is filled, you know, they want to see those things. Let's say like a project is doing, you know, a fair launch for 5 days. Like, I wouldn't want to invest in day one. What, you know, because it makes a big difference to me if it's going to fill, you know, 5 ETH or 500 ETH.
Yeah, I mean, we the marketing team that we work with, we were originally going to do a sort of 5-day launch pad, but they suggested you'd be better concentrating it and just doing it over sort of 48-hour period.
Yeah. You
yeah.
FOMO, and then you probably would have actually a lower raise than what you guys had. That, I think that's a lot of people don't understand about fair launches. They think it's like unlimited funds, but it puts off so many people that you most likely probably going to end up with less raise than if you have an actual hard cap.
Yeah. And what it does do is it makes when the token launches, you know, there's going to be more people that weren't in on the initial raises that will want to get involved, and after they've listened to this AMA and other AMAs and read the docs and everything, that they'll see where the value is and want to be part of it. So it does create a, well, for want of a better term, FOMO.
Definitely, it's a supply and demand, right? That's the most basic equation in all of finance. Is really supply has to be lower than demand, and that's what fair launch doesn't give you, because anyone could buy pre-sale, and that's why you always see the charts dump after fair launch. So I'm glad you guys did it this way. Did it with hard cap, very successful pre-sale. So good launch tomorrow. Do you have any closing statements?
I was just going to finish off what you're talking about there. We also capped it at the maximum anyone could purchase was 2 ETH anyway, so it wasn't like someone could just come in and drop the whole 69 ETH in. Obviously, people can set up more than one wallet, obviously, but you know, each wallet was limited, so it just gives a broader distribution of the token as well.
Yeah, definitely. Yep. I like it. Like, the tokenomics are good. That's why you guys are not crying today, because I'm known to make devs cry. I don't know if you heard about that, but you know, you guys did a good job.
No worries. What's your obviously, because this is a different time zone that you're doing it this time around, do you have, is it a similar sort of amount of participants? So we got 146 in today.
Yeah, last time we had, like, I think the highest ever was last AMA. We had like 180. But we're definitely we're steadily over 100, so that's pretty good.
Cool.
All right, awesome, guys. I'm gonna go end the recording right now. The YouTube video, I'll send you the recording, because not videos, but I don't record it. There's no video content right now anyway, just audio. So I'll send it to you. And good luck on the launch tomorrow, and we'll be doing the giveaway right after the recording is over.
Awesome. Thanks for your time. Appreciate it.